Nikunj. We love having guests in the studio, and today you're going to pick Atul Suri's brains, I guess.
Hello, sir. Good morning.
Morning, sir.
How are we doing?
We are good. We are good.
No one can complain in this market, right?
Yeah, I know. Can't complain actually.
The
nice.
one who've not participated, which is a big crowd actually, they're complaining a lot. They're calling it like too fast, too quick,
too expensive.
Too expensive.
Yeah, ignoring macros, like Anisha said here.
What is the right way of looking at this market? Stay with the trend because trend is your friend.
Absolutely. I mean, that's something we've been speaking about. And see, at the end of the day, we give targets. Okay, I give some target of X, Y, Z. The target's not important. The important part is the direction. The important part is, are you invested? And I think there's a strong case to be invested in India. You'll realize that whether you see globally, let's take it globally. India is probably the only market at lifetime highs.
Yes, we discussed this last time.
Okay, fine. Number two is you go into the sectors. You look at the market breadth. You'll find barring IT per se, every sector is 2 to 3% from lifetime highs.
Yeah.
If you see market breadth on a 52-week high, 52-week low basis. So I think that, you really cannot fight the trend. What is expensive, what is cheap is very subjective. We can discuss about P's and what should be the correct P's forever. But the fact is that the direction is up. My job as a fund manager is ultimately to have stocks that are running faster than the market, and that is how I will outperform and the clients will outperform. So actually spending too much time on where the market is, when after seeing so much evidence, if you still have doubt, then I think it's a question of belief. And that is something which I've learned from Rakesh ji over the years, that the biggest wealth creators I have seen people around him, one thing is common, they've had belief in India, and even through all the corrections that we have seen, they were invested. Yes, they experienced pain. Every investor will experience pain. But the fact is that do you believe or you don't? And when the numbers in the markets and all the statistics we put out are showing you so, I think the question is that am I in the right stocks?
Atul, in the moment of despair, which is somewhere middle of last year, when markets were puffy duffy, you said Nifty 21,500.
Right.
Now what looked like a very tall number, a higher watermark number, we're almost there.
Right.
So time for you to even take your levels higher now?
I was so expecting that question.
He said don't focus on the targets, focus on the direction.
Exactly.
21,500
No, so with due compliments, I mean, Atul was the only guy who talked about even 20,000.
Yeah.
And 21,500 that time more like a very high watermark number.
Right. See, the thing is that it has always three stages I have experienced. That the first stage, when you say people laugh at you, there's disbelief, there's general laughter. I mean, they'll be polite on your face, but after this, you heard what this guy, he's crazy, I don't know what he smokes. Then is the second is the case
You don't smoke what?
I don't smoke. What do I drink? So the fact is that then you get a stage of acceptance. Once we broke 19,200, we made a new high. Then it was, okay, fine, it's possible. And then you reach a stage when people say, bas itna hi. What else? Stretch it. So I think you go through these stages and you realize that the first thing I said ultimately is the direction. See, you and I, we are not buying the index. We are buying stocks. The important part is, am I in the right stock? I'm in the right spaces. Am I in the right sectors? And I think that is very, very interesting. The index is not really showing the actual bullishness of the market. The reason is that if you see the two biggest components of the index, one is banking and second is IT. You'll find that actually they have muted performance. So if you really sort of, adjust for that, you will find that the market is like way, way beyond. The Nifty is way, way beyond because the components per se, the broader market is telling a different story.
So there is no bubble, there is no euphoria, there is no overbought conditions according to you in the market.
I feel that for me, the red flags, Nikunj, are global. What is concerning me is the way commodities have been going up, especially crude. And energy is a very big inflationary impact. You're seeing that in US bond yields, you're seeing that in the US dollar. So I feel that the risk to our Indian markets is more global, and that will get expressed by if you have a global kind of correction happening or you have aggressive FII selling. Per se, if you look at Indian markets, you forget this morning or tomorrow. But if you look at charts or if you look at statistics, you really sense that bubbles, honestly, nobody ever knows. Nobody ever knows. It's only in the future someone say, that was a bubble and it was obvious. It is never so obvious. If it was obvious, there would never be a bubble.
One thing which we are talking about our dear old friend Rakesh Janwala, late Rakesh Janwala, he always made an important distinction. Crisis bol ke nahi aata hai. So if you are, all of us thought in 2021 and 22, inflation is going to be the bugbear.
Yeah.
With that kind of an inflationary environment, markets can never go up. but everybody knew inflation was coming up. So similarly, this entire crude impact in terms of moving from 85 to 90, 90 to 100.
94. Yeah.
94, I mean,
Brent.
yeah. So look, it's not a great situation.
Yeah.
But will this trigger the market collapse? That's what we're discussing. I don't think so. Right, Atul?
See, globally, I feel, Nikunj, sooner or later will have its impact. The difference is that India has stood out. As we are talking about global statistics, the domestic investor has emerged as an amazing force. Yeah. Last year also, if you see, global markets were off. I remember sometime in October or so, the S&P 500 was making 52-week lows. And we were near 52-week highs. In my life, I have never seen such situations. I have never seen such. And people said, oh, this decoupling is all bull, humbug. You know what happens when decoupling happens? We get thrashed. Ultimately, what happened? Those markets moved up to 52-week highs and we moved to lifetime highs. So in that sense of the term, it is true that, markets are cyclical. They have a way of surprising you. Who thought that commodities, we'd be talking about commodities? But I think the big danger point for global markets and markets in India will have a knockdown effect is commodities.
And who'd have thought as well, Atul, that PSUs would be where they are? My alert just hit the inbox that it's at a record high for the PSU banking index.
Right.
I know you were talking about majority of the index being close to their record highs, but are you surprised by this move?
Yeah, I think the surprise is the follow-up. Last year was a great year. In fact, the PSU banks were the best performing sector. And this was after a decade of underperformance. I mean, it was the most hated, shorted space in the world. In India was actually PSU banks.
Yeah.
I mean, the trade of the decade was long HDFC Bank and short SBI. When it turned, what's surprising me is that after a phenomenal 22, they're also having a very good 23. And that really shows that, yes, when decadal trends change, it doesn't end in a year. It actually gets elongated. In fact, the whole PSU basket, if you see, it's not just banks, it's defense stocks. It's a lot of these, infra kind of plays. These are like everyone, people who've been in the market for 20, 30 years have sworn we'll never buy PSUs because many times in their life they tried and they burned their fingers. They've given back 40, 50% drawdowns that have happened. And the market has again ways of surprising. So I think going with the trend, being humble, accepting what the market is telling you, that's what I have learned. So as Nikunj said, the trend is your friend. Until the end when it bends.
That's a good one. But the trend right now also seems to be this entire rally in defense, capital goods, manufacturing, railways.
Right.
Do you think there also you just stick with the trend, or is it getting a bit concerning? It's time to kind of maybe take chips off the table?
See, obviously the price movements have been phenomenal and you know that kind of vertical moves generally don't sustain. But the issue is that first and foremost, as we just said, when things have not moved for 10 years, and then they start making new highs or lifetime highs, these things will not fizzle out in 6 months. They tend to be elongated. Yes, the short-term run may be large. Yes, they may correct, they may shake out. There's a lot of retail and a lot of, like we had that last week, I think one day when there was a broker report. Yes. Stocks fell 5%, 10%. But these things are very, very important because if they don't correct, then very often ends very, very badly. So I, for one, would be actually happy if we see some correction, consolidation, because you cannot have these 90-degree moves. 90-degree moves, a 200, 300% move in a year. Those tend to be concerning. We've seen they don't sustain. But I personally think that this whole PSU thing, etc., is a decadal shift. There's a decadal shift in sectors and themes. Engineering, infra, construction. These guys never moved post-2008. It was a decade that is lost in all these. So I think that when they move, they tend to be rather sticky. We've learned this from 2003 to 2008. We had a similar set of sectors that were moving. Similar themes were playing out. And that was a phenomenal bull market. And it kept surprising us. We kept saying, oh, it's too much. But ultimately, it lasted 5 years.
Look at what we saw, let's say, in a Page Industries or a Shree Cement or I think in MRF.
Yeah.
2008 to 2020, those were the stocks which moved from 2-digit to 3-digit and 3-digit to 4-digit and 4-digit to 5-digit.
Absolutely. Yeah.
So are we looking at that kind of an action in PSU banks?
It's because that's what I saw between 2003 to 2008, Nikunj.
Okay. So
you'll find that similarly a lot of these stocks which were considered engineering, boring, the
backbenchers.
Yeah, because in 2000 we had an IT bull market and I remembered all these things got smashed and nobody wanted to touch. It's a friend of mine very well put it, he's saying जिस company में से धुआं निकलता है वो नहीं लेने का. That was IT bull market. And then what started between 2000...
IT में से कहाँ धुआं निकलता है?
जी जिसमें से नहीं
निकलता है वो
okay,
नहीं लेना. So
okay.
power and other things
So you don't buy anything जहाँ से
right now
धुआं
I think
निकलता है.
जहाँ धुआं निकल रहा है वो लेना है.
So that is also very,
Railways, power,
he
everything.
put it very nicely, you know, and then it did very well 2003 to 2008, and then those things didn't do well, and as you said rightly, there was a very narrow market. It was a very, very narrow market post that right up to 2020. You know, those few quality stocks, whatever, buy at any price, and then again the trend has changed. So I think the market has a way, and I have noticed that our ability to predict the long future is very, very
You know,
limited.
think about it, ITC also. धुआं निकलता है.
बहुत धुआं निकलता है. बहुत धुआं निकलता है.
Sometimes it's so simple, right? I mean, why didn't I listen to this earlier and I would have made like big money?
Okay, now which are other decadal trends which you think are about to peak out?
Okay.
That is also important, right? What not to buy. Recency bias tells us that you buy something which has worked in the past.
Right.
So when it comes to a decadal trend, you'll always be looking at private banks, you'd always be looking at IT.
Absolutely.
So it's important to avoid also, right? So
Right.
where would you avoid?
So I don't know decadal avoidance, but what is concerning, which I said, is the price of crude. And we know that it's a very big input for a lot of industries. So you'll find a lot of stocks which have done well in the past, whether it's paints, chemicals, agrochemicals. You'll find that their input cost will really go up if crude sustains at these levels. And I feel that again, like how last year a lot of them got derated, we could be in that kind of situation. Again, these are great companies, they will do very well. I don't know decadal trends on the negative side. If overall you see a market up move, everything will participate, everything will hopefully make money. But yes, for me, the concern for the next quarter is going to be these kind of spaces or sectors that are going to kind of play out. One sector I would just say on the positive side, which we find we've suddenly gone overweight in our portfolio after almost 2 to 3 years, is pharma.
Okay.
So we post I think post COVID, pharma stocks actually didn't do well. The trend changed. That was the highest overweight position, and they all got trimmed down. But I am finding that in the last 2 months or so in our PMS, we've actually gone overweight pharma after almost 3 years. So I feel that
healthcare names, diagnostic, manufacturing.
not diagnostics, but I think there are some which are the actual pharma places. They are a lot into exports. We sense that the pricing pressure in the US is kind of decreasing. And yes, healthcare, there are some hospital stocks. I think that is something that is phenomenal. That could be genuinely a very, very long-term, great compounding story that is playing out. So we are in those kind of spaces. But that is surprising because that's a sector that's less talked about. It is not, the kind of rah-rah sector. But I think that pharma is actually shaping up very good. You'll see a lot of the pharma stocks, which have actually not done well for years and years, have pushing towards lifetime highs. And that I think could be, again, something that has not done well for very long. When it starts pushing to 52-week highs, lifetime highs, you know that something big could start.
Could that apply to two-wheelers now? Bajaj Auto, Hero MotoCorp, the decadal underperformance.
Absolutely. Look at the electric plays.
Yeah.
That's again, auto is a very interesting theme. Again, an overweight space. What I found was that through our process, you realize that this whole electric side of the play, whether it's ancillaries, whether it is even these end plays. I don't want to talk about names specifically.
You can, it's okay.
It's okay. We'll avoid it. We'll discuss coffee. But the fact is that you'll realize that a lot of these things, which have an electric touch to it, and that is not just in India, it's global.
Yeah.
So I feel that if you are able to, even in auto ancillary is even more interesting. If you're able to segregate that electric place, I feel that there's a very, very big play out happening there.
Would that weave into manufacturing as well as a theme?
Yeah, manufacturing, definitely, capital goods, engineering, they are, the domestic playing themes are actually kind of shaping up very well. Yeah.
Atul, we may feel excited about the SIP, we may feel excited about the number of demat accounts opening, but
Right.
the sum total of the Indian young population versus what the actual reality is, 90% of the Janta has still not participated.
Right.
They are now looking at coming rather
Right.
seriously.
Right.
So what would your advice be for somebody who says, okay, I'm impressed with Atul Suri, I like what he's just spoken on ET now, but where do I start? How do I start? There is something called law of gravity, which could be at play. So how should a first timer start?
So whenever clients approach me for that, I said, what, are you ready to lose 10%? If you're not ready to lose 10%, please don't enter the stock market. If you're ready to lose 10%, the moment is now.
Okay.
It is never, in our market, we've had so many corrections. We've seen it here. Now, we have been in the markets for so long. We've seen, we saw the COVID fall. I mean, that was like scary as hell. Not just at the market level, at a personal level, because you couldn't quantify it. You couldn't quantify it, and see what happens. We don't even talk about it.
Yeah.
We don't even talk about
Ukraine, forget COVID.
Ukraine, a
also.
war in Europe, like again a multi-decadal event. So the fact is that if you're ready to lose 10%, then the time is now. If you're not ready to lose the 10%, probably the time for you will be never. Once you understand the nature of equities, that hey, this is a game where hopefully you get higher returns. The reason you get higher returns is because the volatility is highest. The fact is it goes, risk reward goes. I mean, the investment with the least amount of volatility is a fixed deposit because you never have a single day of drawdown. But the fact is that you know that post adjustment for inflation, it is actually degrowth of money. So if you're ready to lose 10%, the time is now. Who knows?
But even with this mammoth move that we've seen in the mid and the small caps, you believe that the direction or the undertone is positive, it's not looking frothy?
See, there are pockets. There are definitely pockets. As I said, 90-degree angles don't sustain. You know, so there are going to be pockets, there is going to be pain, there will be corrections, but they have to come. That is a process. In every bull market, everything is never perfect and kosher. And then that's our job. We have to be really smart that, hey, which of these are actually backed by fundamentals? If they are backed by earnings, backed by fundamentals, yes, they'll correct, but they will not crap out. So you have to be sensible. Now, just because everything is moved, you go and buy any two-digit stock, you know, that's going to be a problem. So that is the job, I think, of a professional. That is why where we come in. Ultimately, in a bull market, in fact, very often a novice may make higher money. But when markets correct, that's when, you know, as the famous buffet line, it's when the tide turns, you know who's swimming naked. That will actually show out when the market's correct.
And
So, yeah.
yes. Just before I let you go, I wanted to ask your view because last time I spoke with you, you told me that you had those contra underweights, which were large cap banking names and large cap IT.
Yeah.
You're sticking with that or any change in your stance there?
See, it's not I mean, I'm not short or anything of that sort, but you know, at the end of the day, you are overweight some sectors, underweight some
So you're
sectors.
still underweight large cap banking names, private banks?
Private banks and IT. And I'm overweight engineering, electrical equipments, defense plays that there are. So I think that those are more interesting spaces. Yeah.
So before we wrap, let's divide it into three buckets: short term, medium term, long term. What looks good in the short term? What looks, when I say short term, 6 months, medium term 1 to 3, and 5 year plus?
See, in the short term, I would not take it 6 months, but I think the concern for me right now is the way commodities are moving, Nikunj.
Okay.
You know, this could see a bit of an accelerated FII selling if the dollar spikes up. We know, and then at the end of the day, you know, it may not be such a pretty place to be in. So actually, in the short term, I feel that we could be. I think medium term, you know, the targets I've been talking about, that would play out. But longer term, what makes me very bullish is the nature, the composition of sectors and stocks. The last time I saw such sectors move, such stocks move, was a case where you saw the industrial revival. When an industrial revival moves in, the length of the rally and the stickiness of the rally is much, much longer. And if that plays out, then I think that we are in a very, very early stage of a bull market, which to many seems like, oh, but then that is the nature of the market. The markets will correct, they will disappoint, they'll do everything. That's the nature of the market. But the fact is, if you have your head held high, if you are optimistic and positive, I think at the end of the day, if you're in the right stocks, you will make money.
Well, always lovely to have you. Thank you for
very
joining
much.
us. And you know,
Continue
Atul
your
and
artwork.
Atul and me, every time we meet, we just say something. Saturday ko milte hain.
Does it ever happen? Stocks come out on a Saturday.
No, the point is, the second part is we've not met only. With family and as friends.
Yeah, I know.
So I think now that we've discussed on air, we must make it happen.
Yeah, I know.
By the way, this Saturday ko milte hain. Okay.